Hello everyone. Today I want to talk to you about MakerDAO. And I want to make the case why I think it is one of those coins that it is definitely worth your while to invest in. First of all, what is it, right? MakerDAO has two components. One is a DAI on the left hand side, which is a stable coin. And on the right hand side is the Maker coin itself. So the DAI is the stable coin. And because there's no central party, right? Maker is the governance coin to make sure that DAI has a stable value. How does it work? Let's look at it next. First use case, right, is now think of it like that, right? First use case is really a collateralized loan. So means a loan backed by something, right? Just think of it like this. You have a house which is somewhere where you already stay in, and you don't want to sell that house, but you need to take up a loan for some, let's say, for emergency, either for to help medical, to pay some medical bills, or to pay off some wedding expenses, right? Or just to, because there's a short-term investments that you want to take advantage of, and you need those funds, but you don't want to sell your house, right? Because that's your long-term residential stay, right? So you can then take up collateralize your house, meaning you put your house as a collateral to take out additional funds, right? That's what a normal loans that you're very familiar with. So similarly, in this case, Ethereum is the coins that you already hold, right? And DAI is the loan that you want to take out. And in fact, DAI in Chinese is the word means loans, right? Now, Ethereum, this is definitely for people who believes Ethereum has a long-term potential, right? Believes people who want to bet on Ethereum going up many times in the near future, right? So that's what, so it is then makes sense for you to actually pledge your Ethereum, so because you are a long-term hodler anyway, so instead of it sitting down there doing nothing, why don't you just stick your Ethereum, which like your house, it still belongs to you, your Ethereum still belongs to you, but just that temporarily, right, the ownership is now sticked to someone else. So if you cannot pay back your loans, then obviously they can then seize your assets, seize your collateral, seize your house, and in this case, seize your Ethereum. But if you can, at the time, pay back your DAI or your money, you can then get back ownership of your Ethereum. So same thing. So you stick your, meaning you put up your Ethereum as collateral, you get DAI. And DAI is the stable coin. It is created every time when someone takes out a loan in DAI. So DAI is only created when someone takes out a loan, right? By now sticking Ethereum. For now, the Maker only accepts Ethereum as the collateral, but in the future, they will expand that to many, many other assets, which we're going to talk about later. So how does it actually work, right? So first is, let's assume you want a loan of USD $1,000. Then new DAI is created, which is a stable coin, yeah? And so current collateralization is at a minimum of 150%. What does that mean? That means you need to stick, or you need to put out 1,500 minimum of Ethereum to be able to get $1,000 worth of DAI, right? And one DAI is equivalent to 1 USD, yeah? So, and who sets this 150% is whoever who has the Maker coins, right? So Maker coins is the governors. They are like the governor, right? They set the rules basically for DAI, right? So they set everything, including what is the collateral. So for now, it's only Ethereum. And what is the minimum collateralization ratio? That means what is the minimum collateral amount that you need to take out a certain amount of loan? And in this case, they have set it at 150%, right? And they also set the interest rate. So of course, if you take out loans, you have to pay interest, right? And who takes this interest? Who takes the benefits? Just like the banks, maker is like the bank, right? Maker holders will reap the benefit of the interest. They call it stability fee in this protocol or in this contract, right? So every time you stake your Ethereum or you lock up your Ethereum or you put up your Ethereum as a collateral to get new loans in the form of DAI, you are creating or you are entering a smart contract called collateralized debt position or just CDP. Just imagine you are signing a contract, just like, if you put up your house as collateral to take out more funding for any purpose that you can think of, right? You enter a contract with your bank, right? So similarly here, you enter into a smart contract, but with nobody, there's no company behind it, right? But you enter into a smart contract, so it is the rules are all set in place. So when if you cannot pay back, then there are certain rules, a certain process that will kick into place, which we're going to look into shortly. So now in this case where it says that, right? So how does it work is then you put out $1,500 in Ethereum, you get $1,000 DAI. Why do people want to do that, right? It's because your $1,000 DAI now, you can quickly sell that in quite a lot of exchanges now, right? And then you can purchase additional Ethereum. Because remember, so one DAI can give you is equivalent to $1,000 of USD, right? So 1,000 USD can buy $1,000 worth of Ethereum. So now you have $2,500 of Ethereum, right? And on your initial $1,000 of Ethereum, you are actually working your Ethereum harder, right? By still having ownership of the Ethereum, you are now getting 1.66 times more of Ethereum, just like that. And of course, you can continue to repeat this process until you get to 3 times maximum based on the current rules of 150% minimum collateralization ratio. But of course, this is quite risky, right? Because so you always want to have a bit more collateral because Ethereum can fluctuate, right? And we have seen like last year alone, Ethereum prices have gone down like 80-90%, right? So in that case, it is best, it is safe if you want to take out a loan using by staking your Ethereum and take out DAI and buy more Ethereum, or you just want to take out that money because you can sell off your DAI for USD and you can use that USD for any other purpose that you like, right? Either to buy a dream car, which people have actually done it, right? Or to buy other investments. It could be a stocks or it could be a bonds, right? So it could be traditional investments, or you can go for a nice holiday, right? So anything of your purpose that you want to do, it can work out that way, right? And that is so cool. Next then, how does maker holder make money? Because this video is all about making the thesis that, right? I think Maker is one of those coins that is actually under the radar of a lot of people. Not many people talk about why you must hold Maker to actually, this is one of those coins that for me personally is one of those coins I will want to hold in the long term. How does it make money actually? Now, in the good case where people are just quality borrowers and they will pay back their interest on time, right? So now maker holders set a rule that the current interest rate is 1% per annum. So that 1% per annum paid by people who take out the loan, people who created the DAI, who take out the loan, have to pay them, and then the maker holders will actually get this amount. So that's their benefits. So that you will make money. But in the worst case, actually, maker really makes money when people cannot pay back their loans, right? So if the collateral value falls below the minimum 150% level, what happens? So because it's a smart contract, the contract will automatically sell the collateral. It will auto liquidate, right? Because just like a housing loan, right? Just like a normal banking arrangement that you're very familiar with, if you cannot pay back the loan, right? The bank who has your collateral, of course, they would, give you warning letters, but after a while, they will foreclose your house, right? They will take your, because they anyway own the asset anyway in the temporarily. So formally, then they will take your house and sell it in the open market. and then they will take that money and then they will cover back their loans. So similarly here, the contract will automatically self-liquidate. So the smart contract will kick into place, and then they automatically sell the collateral in an auction market, and they will sell that collateral to buy maker coins. Why? Because they want to pay off the loan, pay interest, which is 1% now, and there's a penalty charge as well of 13% of the collateral amount. So this is a lot. So all this, right? They buy maker coin to pay all this, right? Why? Because then and also at the same time, maker coins are sold to buy DAI to cancel the debt. So although people cannot pay back the debt, but the smart contract needs to cancel off the debt as well. Yeah. So and then the DAI is burned. Now, when the first point, when you actually sell the collateral to repay the loans, right? To buy maker coins to pay interest, how does maker holder benefit? It's because when the collateral are sold off to buy the maker coins, right? Then the maker coins are then actually burned. They are actually destroyed. Why? Because by destroying it, it actually diluting the supply of maker, and then prices will go up. And that is how maker coin holders actually make money, right? Because the contract will self-liquidate, and then they will buy maker coins just so that the process will kick into place to pay off the interest, right? So it has to buy enough maker coins to pay off the interest of the 1% and the 13%, so 14% plus the loans, right? Then this larger amount of maker coins will then be cancelled off. That means it will be destroyed, and hence diluting the supply of maker, and prices go up. And that's key for you to know. So what does it mean then? That means the more people take out DAI loans, then the more maker holders will make money. Basically, that's what it means, right? And so it has been 1 year. Maker has been already in existence for 1 year. It was created in December 2017 in the mainnet, and now the 1 year data have shown that people are actually using DAI for various reasons, right? One is for the investment leverage, right? And still holding on to your Ethereum or to any other collateral in the future, because you still believe people who want to do this because they have long-term bullish on crypto, on Ethereum, right? They still want to hold on to their token, but they also want that extra liquidity. Yeah. So people will do on this. Also, there are other partners that are using DAI now called MAKERDAO. MAKERDAO is actually a token that has that allow people to buy fractions of real estate. So they actually digitize real estates, right? So let's say a real estate costs $10 million, or an apartment costs $10 million in New York. Now, by digitizing that building, you can just buy 1% of it, right? So that means 100,000, you can buy 1% of that building already, and you can use MAKERDAO to buy those assets. Now, before this, you have to use, you have to actually give up your Ethereum or your Bitcoin to buy their tokens. Because MAKERDAO is an ERC20 token, so generally you have to use Ethereum to buy. But now, and people don't want to give up their Ethereum because Ethereum can either go up in value a lot, and then you will lose out a lot by giving your Ethereum. So, but now with DAI, right, by staking your Ethereum, you can actually get DAI, and then you can use the DAI to actually buy the MAKERDAO token. And in that way, you are still holding on to your Ethereum, so you can still benefit from the upside, and you can then also buy all these assets at a much more affordable entry price, right? And of course, in the future, when Ethereum go up in value, you just can quickly pay off your DAI, right? Pay off your loan, and you are actually then having more assets. So that is the benefits. Now, there are actually, of course, much more benefits, and let's look at the chart now. First is actually, it is really stability, and this stability comes at, you don't have to trust any banks, any central party, any third parties. You don't have to trust anyone. But the stability is ensured by because, right, the maker coin, the maker holder, right, will actually ensure that the die is held at $1. How? Because anytime when the die is below $1, right, then the die holders, right, people who took out die will have an incentive to buy it, because now they can actually buy it below $1 and then they can just pay off their debt, right? And then they still have their Ethereum back, right? So that's how they maintain the stability. Also, there's something called a global settlement. So in the worst case scenario, right, if in the case of the Ethereum prices really fall below, really crashing, right, more than 90% drop, and the smart contract is not fast enough to liquidate all the collateral, right, to buy maker coins to ensure that to pay back the loan, the system will auto shut itself, right, and then make sure that the DAI coin is maintained at $1. So all this mechanism, by knowing that all this will exist, will make sure that DAI coin is held at $1. And last 1 year of data has shown that DAI is able to held its $1 peg value despite Ethereum crashing to 90%, right? So that is the power of DAI and their smart contract mechanism. Second benefit is, of course, on financial inclusion. Now, right, anyone can take up a loan by just holding on to Ethereum. So a lot of people, and you're talking about 7 billion people in the world who still are not banked, they can now also just have a taste of what credit is, have a taste of what loan is, right, by staking their Ethereum, and then they can, just have the extra liquidity. So anyone can buy Ethereum very easily, right, via a lot of peer-to-peer exchange, localbitcoins.com, or centralized exchanges around the world. But then they can then just, stake their Ethereum and get additional liquidity in DAI, right? They can cash out their DAI and they can do anything they want, right? They can invest in a business venture, and then as long as that business venture is profitable enough, they can just repay their DAI back in time. As long as it's higher than the 1% interest, right, then it's profitable. And 1% is really very low, right? Hence, it is very easy to make a profit out of this. The third point is very easy liquidity. So as I've said, right, because you can so because you just need to stake your Ethereum, then you can have that extra money. So it is really, really easy. And of course, right, by just staking your Ethereum, you can do that 24/7. There's no bank closure, right? In a normal banking arrangement, when you want to take out a loan, you have to apply, right? And then you have to actually wait for approval. And they can only process your loan. They can actually check your validity of your ID, of your income requirements, of whether you qualify during banking hours. And that means 5 days a week and like 8 hours a week, right? So it takes a few days generally, or even at least 1 day to approve a loan or being rejected. But in this case of just taking your Ethereum, it's 24/7. You can immediately, there's no permission. You don't need to get permission. As long as you have Ethereum, you will get DAI, right? That's what it means. So yeah, very, very easy. And spot on incentives. Why? Because the maker holder, right? The design of the whole system is so intelligent that maker holder, the way the smart contract works, the maker holder are actually strong incentives to make sure DAI is pegged at a stable value, and collateralization is, enough collateral is in place to ensure the system won't crash, right? They also make sure the interest rates are set not too high, because initially it was at 2.5%, then they reduced it to 0.5% just to increase the demand of DAI. So the maker holders have a very strong incentives, because they will benefit if more and more people adopt DAI, right? So incentives are aligned so that more and more people take DAI, and then that's really good for everyone out there, right? Financial inclusion, and then they will also benefit. So very, very aligned incentives. Fifth, automation and efficiency. Because everything is coded in, it is in a smart contract, they can then offer a very low attractive interest rates, right? Loan at just 1% per annum. That is really, really super low, right? It is in fact the lowest among all loans now based on crypto. So, and why it's able to do that is because there's no manual labor involved. They can cut away so many layers and middlemen, and that is why they're able to offer this kind of interest rates. Compare that to a bank, right, where there's so many people involved, right? Approving, after approving, then they would paperwork, right? Just to, yeah, then they need to document, keep the record, disburse the loan, so many layers, so many departments, and so many people. All this costs money, right? To pay off the employee, to pay off the bonuses, to the office space. So that's why bank loans are definitely much higher interest, despite being collaterals as well, right? And of course, you cannot use an Ethereum as a collateral to get a bank loan, yeah? And tangible use case. So as I've said earlier, now you can actually, right, use the so one very tangible is the example of MAKERDAO, where you actually can use the DAI to buy fractions of properties, right? Very high-end properties, but you can now just buy fractions of it. Very affordable, right? It can really, really increase the equality in wealth, right? And also, of course, just any use cases you want extra liquidity for any purpose you want, you don't have to ask for permission from the bank, right? You can just, as long as you have Ethereum, you can. And of course, Ethereum now is very affordable, right? And in fact, data have shown that to date, almost 2% of Ethereum has been locked to generate DAI, to create DAI. That's huge, yeah? Transparency, because everything is on a blockchain, right? You know immediately how much is your collateral at any amount of time, right? And you know that your collateral is safe in the blockchain. Versatility. So as I've said, currently they only allow collateral in terms of Ethereum, but they already say that they are going to launch a new product called multi-collateral maker. What it is basically then they will accept many other assets to be accepted as collateral to generate new DAI, to generate new loans. And that means more people have the option then to then generate more loans, right? Because in the future, they have mentioned already that, it will be extend to other cryptocurrencies like Bitcoin, right? XRP could be, right? Or even other digital tokens like, Apple shares or anything actually that, that will be really, really cool. Nine, of course, is a great investment because of all the point I said, right? Maker itself, if you invest in Maker, you can reap all these benefits of the interest and the liquidation fee, which is 13% of the amount of collateral, which is huge, right? And of course, you get to have a say in the how DAI works, and that is cool because you are now effectively like a banker, right? And of course, you have the income, then you have the price appreciation as well, right? And how they do that is basically, I just want to reiterate, they buy the coins, right? And then they actually burn the coins, so diluting the supply, and then prices will go up because then it's more valuable. And that is why prices of Maker has already been going up. But I think with future, now is just the first use case really of this DAI being a loan. In the future, there will be more and more partnerships, and more people still do not know of Maker, that it can be such a cool investment, right? A lot of people, top 10 coins that they like, Maker is not even one of them. So that's why this is still very much under the radar, and that's why now it makes sense still to get into it before it gets into mainstream. Lastly, of course, is tax benefits. Because if you hold Ethereum, right, and if you sell it, you then have to report the capital gains. So if you stake it, then, because you're not selling it yet, then you are not realizing any gain or losses. You're basically then, you're safe. You are, So yes. So lastly, the future upside of DAI is plentiful. These are just some of the key ones that we know of today. One is, of course, definitely the multi-collateral. With the multi-collateral coming into place, then a lot of people can basically then generate more DAI, and basically a lot more people can become a banker. Yeah, and that is huge. Banker are basically the ones that make a lot of money, right, to date. DAI savings, they are going to introduce something called DAI savings. So if you hold on to your DAI, by not doing anything, you will also get interest on it. So this is just additional money for you. Just works similarly to a banking savings account. So again, I foresee a lot of people will use DAI, and that again will mean good thing for Maker. And also the Maker Foundation, the team, they are also introducing something called Bounty to improve the features. So Maker team is a very well funded. They, among others, they are, they have already secured 2 rounds of funding from Andreessen Horowitz, his venture fund, A16Z. Now, Andreessen Horowitz is a very, very rich billionaire venture capitalist. He has, early investors in Facebook, Airbnb, Twitter. Yeah. So you can tell rich people, smart people are investing in Maker. So what do you think, right? If it's good enough for them, don't you think it's good enough for you, right? And well-funded project like this, and that's why they're able to give away bounty. They basically are giving away rewards for people to improve the features. So for example, they are asking people to look into their wallets. How do you improve it? Launch an app where it's very easy for people to generate DAI. So this is all in the future. And, of course, this is just, again, very early stage. They are continuing to develop more and more more and more features to build it up into a very robust ecosystem. So yes, on my final note, again, I definitely think, it makes sense to have some Maker coins in your portfolio. And this is one of those you definitely hold it for the long term. So yeah, again, it's not financial advice, but this is something that seriously I think upon my huge research into this, right? So thank you so much for watching and listening. And please subscribe if you like this episode and share this around, right? And yeah, and God bless. Hope you're having a great day. Thank you so much.